What is up, guys, and welcome back to Money Made Simple. Today we're going to be revisiting my WealthSimple account, and if you didn't watch the first video, I'd recommend you go watch that one before you watch this one, just because in that first video I went through my entire portfolio, through every account I have, through every position that I own, and I gave a really in-depth look at my portfolio. So if that sounds interesting to you, I'd highly recommend you go watch that first. Today my goal is just to really share what I've done in the last couple of weeks and what my strategy is going forward for the next couple of months. So if that sounds like it interests you a little bit more, then you're in the right place. Okay, let's jump right into it. So you can see my account is almost at 71,000. We're sitting at $70,920. That is an increase from the last time I did a video. I was just over 67,000. So we got a nice increase there. Now I haven't done too much to really anything other than my FHSA and my RRSP. So again, if you want to look at all of my other accounts here that you can see that I hold, then go watch that first update that I did, or that first video that I did. This one is just an update on what I've done since and what I'm planning on doing moving forward. So really nothing else has changed other than these two accounts. So let's just go ahead and jump into the FHSA. This account was the one that I prioritized right after I did the last video, and pretty much every paycheck I took everything that I could afford to send to WealthSimple and I put it into this FHSA. The reason I did that was because all the money you invest into your FHSA is tax deductible, and I wanted to lower my taxes, and I also want to purchase a home in the next couple of years. So this account is really favorable for me. So I decided to throw in all the money I could before the end of the year, because the cutoff for your tax deductions on your FHSA is December 31st. So I really just put all the money that I could up until the end of the year into this account. We can check the history here and see in the last month I was adding in quite a bit of money. You can see even over the last 3 months I really stepped it up there towards the end as it was getting closer to the end of the year. But since December 31st, I haven't really done too much to this account, but we're up almost $2,000, 19% all time. So it's doing really good. And it's currently sitting at a, currently sitting at a risk level of 7 out of 10. And so probably in the next year or two, I'm going to bump that down to probably a 5. And then maybe 2 or 3 years from now, I'll bump that down to about a 3. As I get closer to purchasing a home, I want to bring that risk level down so that hopefully when I do need the money, it's not in a down market and then I've lost money and I'm taking everything out for a net loss. That's really it with the FHSA. Right now, my prioritization is the RRSP. And so my last couple of paychecks, as you can see in the history here, have been favored towards the RRSP. I'm going to continue to dump money in there up until about the end of February, because your RRSPs are also tax deductible. Technically tax deferred would be the better term for the RRSP. But I want to lower my taxes this year, so I'm heavily favoring my RRSP right now up until the end of February, because I think March 1st is the cutoff for your RRSP to count to last year's taxes. So I've put in a couple paychecks into here. You can see all time here. We're also up about $2,000, 33% all time. So this account is doing great. A large part of that is because this account is sitting at a 10 out of 10 risk level, as you can see here. Reason being, it's my RRSP. I'm not going to have to touch this money until I retire. So I can really amp up that risk level because I can take those highs and lows of the market. It doesn't really affect me because I know I don't need this money in the near future. If this was an account that I know I was going to need relatively soon, I'd want that risk level a little bit lower, and that way it grows more at a steady rate rather than these big ups and downs. So that's about it for the RRSP here. Almost at 8,000 in total, which is really good. Looking to step that up a little bit more this year, but that's essentially my plan right now. That's my strategy. Heavily prioritize my RRSP for the next month and a half or so. And then, probably the same thing next year. By the time December comes around, I'm really going to prioritize that FHSA. And then in the new year, for the first 2 months, I'll really hammer that RRSP. For the rest of the year, I'm more so focusing on my TFSA and or my emergency fund if I need to up that. Everything else kind of stays the same. My kids fund, I'm not really putting too much into right now because it's just not a priority. My crypto account, I don't really add any more into that. I kind of just have what I have, and I just don't really do anything with it. I'm just gonna let it grow. My non-registered account, this is just like a fun account. I only own one stock in there. so I don't even consider it to be an account. I'm just not even going to look at that. But all my other accounts here are doing very well. Just to take a peek into my TFSA, we're down $25 on the day. We're up about 12,000 all time, about 40%. We have a little bit of cash to trade in here, but I won't be adding anything else into my TFSA until March. Because again, I want to prioritize that FHSA and the RRSP first, and then we're going to go hard on our TFSA for the rest of the year. All my positions in here are still the same from the last video. I haven't bought anything. The only thing that I have done to my TFSA actually is I bought a share of ZEQT. This is an all equity ETF, and it essentially is an ETF that holds other ETFs. So within this ETF, you have the S&P 500, you have Canadian ETFs, you have Australian ETFs, you have European emerging markets, like all these different ETFs in one. So this ETF is a great way to get a lot of diversification just within one ETF, even more than you would get with the S&P 500. The dividend rate is 1.4%, so it's not really anything crazy. It is a little bit more than the S&P 500 though, which is something to note. So I wanted to get into this, and it is currently sitting just about at its all-time high, so I don't want to invest a crazy amount into it right now. I have a feeling the markets are probably going to drop sometime soon because they've been on such a tear recently.
Please, please, it's too much winning. We can't take it anymore.
I would imagine that a correction is going to be coming soon, so that's kind of what I'm on the lookout for. And when that does happen, that's when I'm going to buy a lot of shares of ZEQT, just because I want to up that position and have that be one of the bigger positions within my TFSA, just for diversification's sake, and because it's a pretty safe ETF all in all. Other than that, there is nothing else that's changed in my TFSA. Everything else has stayed the same since the last video I did. The only thing that would have changed are dividends that I've received, and then those dividends automatically get reinvested into that stock. So maybe on my next update video, I can do a dividend video looking back into the dividends that I made in 2025. But for right now, that's about it. That's all I really have here. That is what my account is sitting at, $70,941. Hopefully the next time I do an update, that will be even higher. That's the goal. But the markets are unpredictable, so time will tell what will happen. But yeah, guys, that's really it for this video. I know this one was a little bit shorter, and there's not as much to go through as the first one, because the first one I went really in depth. So again, if you haven't seen that, I'd highly recommend you go check that out first, so you get a good understanding of what my portfolio is and what it looks like. For this one, just wanted to kind of share with you my thoughts and ideas and plans for the next little while and what I'm going to do in that portfolio. And then, like I said, after March, I'm going to really hammer the TFSA, and that's when things start to get fun, because then I get to hand pick my own stocks and choose what money goes where. So that'll be really fun. For now, it's kind of more or less boring. I'm just throwing it into the RRSP, and it's getting auto managed for me, which I'm not upset about by any means. It's performing great, and it's a little bit less stress and less things that I have to navigate and be aware of. That way I can just kind of totally focus on my TFSA, and I don't have to worry about which stocks I own and which account and making sure everything's balanced. It can be a lot. So anyways, I hope this video helped you in some sort of way. Maybe you found a new stock or an ETF that you want to invest into, or maybe you realize you need to be prioritizing a certain account over another. At the end of the day, everybody's different. What works for me might not work for you, but that's the beauty of finances. You get to kind of just take it day by day and change things as you go until you figure out what works for you. I'm just sharing you what has helped me be successful. Hopefully you guys can pick up a thing or two along the way that might help you as well. But at the end of the day, I have a lot of fun making these videos, and I hope you guys have a lot of fun watching them as well. So if you did, please subscribe and like the video. That helps out a lot. But that's it for this one, and until the next one, peace.